Once upon a time,
many SOL holders were predicting that Solana would surpass $1,000. These days, though, many are wondering if Solana will ever shake off its reputation as a meme coin casino. Meanwhile, Solana has continued building. Promising crypto projects in its ecosystem have continued gaining adoption, and now public companies are starting to buy billions of dollars worth of SOL. And this begs the question of whether Solana could make an epic comeback and whether SOL could still hit that four-figure target. Today, we aim to find the answer. My name is Nick, and if you hold Solana, this is a video you cannot afford to miss. Before we get started, it's important to note that nothing in this video is financial advice. It's educational content intended to inform you about Solana. Also, do note that many members of the Coin Bureau team do hold SOL as part of their personal crypto portfolios, but you can rest assured that this won't affect today's video. And if you want to know what other cryptos we hold, then become a member of the Coin Bureau Club. That's where we do weekly reviews of promising small cap altcoins, share alpha about upcoming crypto catalysts every day, and discuss the next hot narratives in our Discord. The link will be down below. Now, it's been about 3 months since we last covered Solana, but a lot has happened since then. In retrospect, we basically reviewed Solana at its local top. Trump's meme coin had just launched, and the resulting frenzy sent SOL skyrocketing to new highs before experiencing an epic crash. Now, for context, this was at the end of January, when there were still high expectations for the massive bull market the Trump administration would supposedly deliver. As many of you will know, these expectations were not met, and the crypto market was dragged through the mud in February. Obviously, that was because of Trump's tariff threats, which began around that time. But let's back up. Prior to Trump's tariff threats, there were 2 Solana updates that seemed to have flown completely under the radar. And the first was the fact that the launch of the Trump and Melania meme coins had caused the supply of stablecoins on Solana, primarily USDC, to balloon past $10 billion. And this was because both the Trump and Melania meme coins were pooled against USDC, not SOL, like 99.99% of other meme coins. And this means that everyone who bought Trump or Melania first had to buy USDC, either directly or indirectly, which caused the supply to increase. And what's fascinating is that even though Trump and Melania have since collapsed, the supply of USDC on Solana didn't, and it continues to grow. Anyways, the second Solana update that everyone seems to have missed was the news that Virtuals protocol had expanded to Solana. Now, for reference, Virtuals is arguably the most popular protocol for AI agents, and it first caused a buzz late last year when it launched on Base. And if you watched our subsequent review of Virtuals, you'll know that it had been planning a launch on Solana for a while. But of course, this was all completely overshadowed by the meme coin scandal that followed a few weeks later. The TLDR is that the Argentinian president shilled a meme coin that turned out to be a rug pull. In contrast to prior meme coin rug pulls, this essentially revealed the dirt underneath. And that's because it implicated some of Solana's top protocols, including Meteora and Jupiter, whose founders allegedly had prior knowledge of the meme coin launch. And the result was the resignation of one of Meteora's co-founders and a collapse of trust in Solana's ecosystem. Throw in a bearish macro backdrop because of tariffs, and you've got the perfect recipe for a massive crash, which is exactly what Solana got. SOL fell by 40% in February, and the total drawdown from the local top in January to the local bottom in April was a staggering 66%. Not surprisingly, the sentiment around Solana fell even harder, with many saying that Solana had even topped for this cycle. However, in recent weeks, Solana has rallied 50% from the lows and is showing early signs of a proper recovery. And this means the story may not be over just yet, and the developments that Solana has seen since February suggest that what lies ahead could be even better than what was originally expected. And by the way, if you're enjoying this video so far, then let us know by smashing that like button. And if you don't want to miss the next one, be sure to subscribe and ping the notification bell as well. Back to the video. Now, in early March, things started looking better for Solana. First, Trump announced that the US would establish a, quote, crypto strategic reserve that includes XRP, SOL, and ADA. Funnily enough, Solana founder Anatoly Yakovenko wasn't too keen on the announcement, worrying that it would threaten the decentralization of the cryptos in question. And some would argue that Solana is already pretty centralized. In any case, so Trump's announcement was followed by an actual executive order, which specified that the crypto strategic reserve would actually be a, quote, digital asset stockpile consisting of cryptos that the US government had already seized. And notably, the executive order also specified that the exact cryptos included in the stockpile would be identified within 60 days of that order, which was last week. No updates at the time of shooting, but chances are that Sol will be included, especially given Trump's previous announcement. Regardless, the second bullish tailwind for Solana in March was the launch of Solana futures on the CME, which happened in mid-March. Now, for those unfamiliar, it's believed that CME futures contracts are a prerequisite for the SEC to approve the spot Solana ETFs, and this is part of why Bloomberg's ETF analysts recently increased the chances of a spot Solana ETF approval in 2025 to 90%. As you can see, the final decision date for the spot Solana ETF is estimated to be sometime in early October this year. And it's possible that the SEC will approve the ETF much sooner than that, now that Paul Atkins, the new pro-crypto SEC chair, has been approved and taken his post. Another factor that could improve the chances of a Solana ETF being approved is Kristen Smith's decision to join the Solana Policy Institute. Now, for those unfamiliar, Kristen was the CEO of the Blockchain Association, which is effectively the most powerful crypto lobbying group in America. Her decision to pivot to focus exclusively on Solana could therefore foreshadow regulations that are positive for it. Whatever the case, the third bullish tailwind in March was BlackRock launching its BUIDL fund on Solana. As many of you will know, BlackRock is the world's largest asset manager, and BUIDL is its tokenized real-world asset product. Logically, if BlackRock feels comfortable enough to launch BUIDL on Solana, then any concerns around things like congestion and outages are probably no longer valid. April, though, was when things started getting seriously interesting for Solana, and that's because two public companies announced that they would collectively buy $1.5 billion worth of SOL. And the first was DeFi Development Corp, formerly known as Janover, a real estate firm that was acquired by former executives of the Kraken exchange. And the second was Sol Strategies, which shouldn't be surprising given the name. Sol Strategies announced that it had raised $500 million to buy Sol at the end of April, and recently announced that it had started doing so with this money. Similarly, DeFi Development Corp announced that it planned to raise $1 billion to buy Sol at the end of April, and recently bought a nice big bag of it. And if you watched our recent video about the publicly traded companies that have been accumulating Sol, you'll know that they've purchased over 625,000 Sol and counting, and that they plan on purchasing another 10 to 11 million more with their massive cash piles. And this would offset about half of Solana's annual inflation, which could be reduced as part of a recent governance proposal. More about that later. The key takeaway is that companies are starting to buy SOL in size, and this sets the stage for a dynamic similar to what we've seen with BTC. Namely SOL being more resilient during crashes and more explosive during rallies. And this effect could be amplified once the spot Solana ETFs are approved. Throw in stablecoin payments on Solana after stablecoin regulations pass, and it seems possible that SOL could hit that $1,000 target that everyone has been eyeing. And FYI, PayPal, one of the world's largest payment processors, is working to expand the adoption of its PYUSD stablecoin, and will use Solana as its main payment rail. And it's safe to say that this could have lots of investors aping into SOL.
Oh, I didn't see you there. Well, now that I've got you, I may as well let you know about the Coin Bureau deals page. It's over there where you'll get $100,000 sign-up bonuses on the best exchanges in crypto, as well as 60% trading fee discounts on said exchanges. And you can also get discounts on hardware wallets. All of that in the Coin Bureau deals page down below in the description. Now you go back to the video, I'm going back to chillaxing.
And this brings me to the moment you've all been waiting for, and that's SOL's current price action and future potential. As I mentioned earlier, it has taken a battering in recent months. Some of you might recall that we had flagged this crash risk as we noticed that Solana's on-chain activity was starting to fall. The bad news is that this on-chain activity continues to be sluggish, which suggests that Sol's recovery could also be slow. The good news is that this on-chain activity appears to have bottomed, which suggests that it could start to move higher along with Sol's price. And this begs the question of what the catalyst will be that triggers a Sol recovery. And it's possible that the answer will be AI agents. And that's simply because AI agents are analogous to meme coins. In practical terms, this means that AI agents have the potential to create the same demand for Sol that meme coins did last year. And as we saw with the virtual token, AI agent-related hype can be enough to take a crypto's price vertical. It goes without saying that Sol is much larger, so the chance of it going vertical because of AI agents is pretty low. The caveat is that Solana is much more than a meme coin casino. It's a general-purpose Layer 1 blockchain that supports dozens of use cases, many of which are likely to see true mass adoption. As it so happens, it appears that Solana has been targeting two use cases in particular: DePIN and payments. On the DePIN front, we've seen Solana projects like Helium acquire hundreds of thousands of paying users with the low-cost mobile plan it offers with the help of T-Mobile. In fact, some would say that Solana is also a de facto DePIN blockchain, as it hosts most of the biggest projects in this niche. As for payments, I'll remind you that we're still waiting for stablecoin regulations to pass. At the time of shooting, the Senate is trying to push through the stablecoin bill, but is facing setbacks because of Trump's crypto affiliations and perceived conflicts of interest. With a bit of luck, these hurdles will be overcome, and if they are, we could see stablecoin regulations passed as soon as the end of May. The combination of a speculative wave around AI agents, DePIN, and stablecoin payments could be the catalyst that cause Sol to recover and push it to new all-time highs. The first step, though, is for it to get back above that key level of $180, and this would confirm a recovery, technically speaking. And if you've been keeping up with our Solana updates, you'll already know that we believe it's possible that Sol could hit close to $1,000. And that's just because we believe it's possible that it is following ETH one cycle behind. ETH hit a market cap of around $550 billion in the previous cycle. Sol hitting a market cap of $550 billion would therefore translate to a price of around $1,000. But there's one big caveat. And that's that Solana could lose market share to competitors the same way that Ethereum did in the previous cycle. The elephant in the room here is, of course, Hyperliquid, which is gobbling up market share for derivatives dexes and is starting to expand to general-purpose offerings. Take a second to consider that Solana's original goal was practically to do what Hyperliquid is doing now, be the top trading platform for tokenized assets. Given this fact, we believe that a more realistic estimate for the Sol cycle top could be something around $500. But I will reiterate that $1,000 is still possible, precisely because big buyers are showing up in the form of public companies and soon in the form of spot ETFs. Now, whether Sol could rally to $1,000 ultimately depends on Solana's upcoming milestones, and the first milestone is a potential reduction of its inflation rate. In March, Solana validators narrowly rejected a proposal that would see inflation changed so that it would be based on staked supply, like Ethereum. While the proposal did not pass, there continues to be a discussion about changes to inflation. The second milestone is one I'm sure you've all forgotten about, and that's the launch of Solana's Seeker phone. A blog post from Solana Labs in January noted that the phone would launch in mid-2025. Promotional content for Solana's upcoming Accelerate conference suggests the launch could be announced about that time. And in case you missed the memo, Accelerate conference is from the 19th to the 23rd of May. The third milestone is one I'm sure you all remember very well, and that's the launch of the FireDancer client for validator nodes. The TLDR is that FireDancer will make Solana exponentially faster than it is now. Although there's no exact release date for FireDancer, a recent validator discussion panel revealed that the date for FireDancer's launch could also be announced at the Accelerate conference. The fourth and fifth milestones are two that I mentioned earlier, and that's Solana doubling down on DePIN and stablecoin payments. And this is something that Anatoly has mentioned in many interviews, but I'll repeat that we're probably going to need to see more meaningful regulations for these catalysts to take effect. As a fun fact, Anatoly and other members of the Solana team have been asked whether they regret the fact that Solana has become associated with meme coins. Lo and behold, they've started saying the same thing that we've been saying in our previous reviews. Meme coins were a net benefit because they fundamentally stress-tested the Solana blockchain. If it can handle a meme coin craze, then it can handle anything. All we're wondering is how exactly Solana wants to position itself going forward. For example, Anatoly mentioned in an interview that the end game with Solana's phones is to disrupt the duopoly of Apple and Android in the mobile scene. And this would fit hand in glove with the focus around DePIN projects like Helium, which you'll recall offer mobile services. The thing is that this might not be good news for Sol's price. And this brings me to the challenges that we foresee for Solana. And the first challenge is its association with meme coins. The fact of the matter is that Solana is still ground zero for most of the meme coin speculation. Fortunately or unfortunately, there's nothing the team can really do to change this. From what we've seen, this seems to be a big turnoff for developers, with many saying that the meme coin association is one of Solana's biggest issues in a survey concluded back in January. And there seems to be something to this, as some crypto projects we reviewed in the Coin Bureau Club explicitly stated that they decided against launching on Solana because of its meme coin association. And that's bad news for future adoption. The silver lining is that it seems that most retail investors have learned the hard way that meme coins are one-way tickets to getting wrecked rather than actual investments. And this means the words meme coin and Solana should appear less frequently in the same sentence in all of the crypto headlines. And this ties into the second challenge though, and that's adoption. The double-edged sword of Solana's meme coin saga was that it damaged the project's reputation, but also reportedly onboarded millions of users to its ecosystem. Now, Solana needs to find a way to keep its users, and stuff like DePIN probably isn't going to cut it. And that would explain why stablecoins are the primary focus. But again, we're going to need to see stablecoin regulations pass for Solana to get any meaningful adoption on that front. And as I mentioned earlier, Trump's ties to the crypto industry are starting to stall crypto bills in Congress. And this is bad news for Sol, whose future demand drivers are dependent on Solana unlocking new use cases that require both stablecoin regulations and broader crypto regulations. For what it's worth, the fact that Solana continues to have the most user-friendly front ends means it's perfectly positioned not only to keep its existing users, but also expand its user base. And this is a not-so-subtle reference to Phantom, which could someday offer airdrops to incentivize new and existing users. However, this relates to the third challenge, and that's development. Perhaps we're mistaken, but Solana seems to be lagging behind its competitors when it comes to development. And a big one here is Sui, which has been vertically integrating its architecture and shipping products left and right. In plain English, Solana's competitors are moving faster, and that's mostly because they're more centralized in their architecture and organization. And this pertains to something we've mentioned in many of our altcoin reviews, and that's that when it comes to layer ones, it's a race to the bottom in terms of centralization. The most centralized crypto will eventually win because it'll be the fastest and the cheapest. In other words, Solana might not be centralized enough to compete with the next generation layer ones like Hyperliquid. And this sounds crazy, but it seems to be playing out before our eyes. Solana needs to coordinate its ecosystem more effectively if it wants to stay ahead. Thankfully, this seems to be happening, with Solana Labs finally launching a full website complete with blog posts and milestones. And that's why many members of the Coin Bureau team still hold Solana as part of their personal portfolios and still believe that it has amazing potential. Even though this potential could be getting smaller because of competition, Solana remains the most dominant layer 1 by a wide margin across multiple metrics. All it needs to do is to maintain this lead and ideally increase it, and its price will eventually reflect this reality. Okay, our thoughts on Solana. I hope you found them useful, and if you want to learn more about Hyperliquid, then check out our video on that right over here. And if you're not subscribed to the channel yet, you can do that right over here. That's me for now. Thank you very much for watching, and I'll see you again soon.